between Venezuela and Iran, and now with the Gulf states joining our effort, particularly the United Arab Emirates and Saudi, China has to worry about its energy supply for the first time in a long time.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that
Welcome, everybody, to this episode of The Bull of Wall Street. We are joined today by our dear friend, John O'Connor, CEO and Chairman of J.H. Whitney. Now, J.H. Whitney has several companies, which we'll talk about a little bit, but we're very blessed to have JOC, as that's what he goes by, with us today. And ever since the United States had the operation with Venezuela, I've been wanting to get John back on our podcast. He and his partner Alan joined us last year, and JOC, as many of you know, is an expert on geopolitics. And so, with what's going on with Iran, we thought it would be very timely for financial advisors to hear from JOC again. And I'm fortunate to be able to talk to him more regularly and ask him about, things that are going on. So he usually picks up my phone call and tells me his perspective on things, which is brilliant. And again, we've got our original three hosts. We got Jim Worden, our Chief Investment Officer at the Wealth Consulting Group, and Talley, our Chief Market Strategist, with us, JOC. So let's start out with J.H. Whitney for those that are listening in and watching that don't know as much about what they do. John, I know that you guys have several companies here. The one that we do business with, you guys have a joint venture with DWS on an ETF with the symbol CRTC, which tracks the U.S. Critical Technologies Index via Selective. It's a product investment strategy that we like for our clients, and we can get into that part of your business here. Obviously, there's some other indexes that you have with other partners, but can you tell us a bit about your work with the United States government, and maybe just real quickly before we go there, JOC's bio and his background outside of his work with his company, J.H. Whitney. Previous to that, he was chairman of J.P. Morgan's Alternative Asset Management. He serves on the board of numerous companies. He's also a senior fellow at USMA West Point, where he lectures and on economics of national security, and he's a member of the Global Tech Security Commission. He also served as a member of the U.S. Department of Defense Business Board from 2005 to 2021. So he does a lot of work with the United States government. And if you could share with us a little bit about that and how, the work that in your investment management that we're involved in, how that all started. And then maybe we can switch gears and our guys can ask you about what's happening with geopolitics, and you can help us and the people that are listening in.
Well, Jimmy, thank you for the generous introduction. And Jim and Talley, it's great to be back with you boys. It's a privilege to lead J.H. Whitney. And as Jimmy mentioned, we have three lines of effort. In our government advisory business, this really goes back 8 years, where the U.S. government began to understand that we were back in an age of great power politics and strategic competition with a peer competitor in the People's Republic of China. And their strategy was to win without fighting, that their strategy was to eclipse the United States as an economic and diplomatic leader of the world. And so I've had the privilege for the last 8 years of working with various elements of the national security and intelligence communities about campaigns to understand Chinese strategy and operations in economics and technology development, particularly, and then helping develop strategies of our own to either counter theirs or initiate our own. So, what that takes the shape of is doing things like we were asked to assess the emerging quantum ecosystem, ranging from compute networks and the entire stack, and identify who the top 30 national champions for the United States are and who the top 30 national champions for the Chinese are, and to essentially come up with a net assessment of who's winning and who's losing, and then also where the vulnerabilities may lie. So it's really interesting. It's a great privilege to work with clients like that, and that's what we do. That caused us to have a really mobilizable knowledge base that says, well, wait a minute, why shouldn't we evolve this into an investing capability? Historically, J.H. Whitney goes back to 1947 as one of the leading venture capital firms in the country. A number of years ago, my partners and I had the privilege of returning investors their capital. And so we run now predominantly as a multifamily office, but we still continue to invest in late stage venture and early stage growth companies, all of which support the national security and intelligence community missions. In the final business that Jimmy mentioned, we've basically evolved our analytical capabilities to the point where we license data and analytics to a variety of Wall Street firms. So that's what we do. And it's a privilege to work with firms like DWS and Wealth Consulting Group. We have a view on the world. We have a view on markets. They're firmly held. But I defer to Jim and Talley as CIO and strategist. I can present our framework, but as with all frameworks, subject to debate.
Guys, do you have any questions for JOC that you want to get started with?
Well, that is a wonderful intro, JOC, and I'm just thinking about what you're saying with the task to identify the 30 top companies here and the 30 top companies in China, and where did we fit? So, can you share a little bit more about that in terms of like how close things actually are, or are we way ahead? Maybe there's areas that we're lacking, but it's super interesting that there's even a lot of focus on that.
Well, I think there's a slide in here, which Sarah, if you go to, I can frame the conversation a little bit, Jim. It's, as I'm looking through this, it's slide number 7. If you go to slide number 7. So Jim, in answer to your question, look, in the economic and techno area, we have 3 main points of competition with the PRC. And one is trade, one is technology, and then the final are capital markets. And it's interesting to talk about those areas as instruments of national competitive position, as opposed to just independently existing domains. But as we're really appreciating the consequences today, the United States over the past 35 years has gone from being the center of a major trade network based on our manufacturing and industrial strength. And that's shown in the left column at the top there with the American flag in the middle of that spider web. 35 years later, the United States is no longer the center of a trading web because we've lost our industrial and manufacturing prowess. And we're now a subsidiary network of a Chinese-led system.
Wow.
And so when we think about that, that is part of this sudden urgency to reshore manufacturing and industrial activity, because this gave rise to critical dependencies and critical reliances. That's, what critical rare earth elements and critical materials and
Sure.
permanent magnets. That's not just about mining resources. At its heart, it's about industrial processing capability. And because those tend to be dirty industries with major environmental negative externalities, the United States was happy to let those industries go offshore, and they tended to end up in China. And China uses those as a means of national power as well as economic employment and productivity. In the middle column on this chart is, back in 2021, the Defense Department, then now the Department of War, and the White House identified 12 critical technologies. Critical in the sense of whoever leads will lead the world. And quantum, which I just mentioned, is one of those technologies. So we've heard a lot about AI in the last 18 months, but I would argue that when the quantum introduction day, or Q day as it's become known as, will be as disruptive as Anthropic, ChatGPT, et cetera, et cetera. So the 2027, 2028 industrial, 2028 impact is going to be all about quantum. And it will be one of those things that's been hiding in plain sight for a long time, but it will suddenly become practical. So when you look at these 14 technologies, we lead in some, they lead in some, but as a general matter, I would call it a tie right now. And regrettably, the trend does not favor us. So we produce 162 mining engineers a year in the United States. China produces 3,000.
Wow.
So this is the underlying dynamic which has caused the United States to suddenly embrace industrial policy, because purely passive market economics, as distorted by the PRC, was having a very negative effect on the strength and resiliency of the United States. Now, the good news is in the right-hand column, where we have by far the most dynamic and deep capital markets in the world. And ironically, both ourselves and the PRC depend on access to global savings pools to run our systems. And we have the high ground in that. So those are the three areas. And it's pulling this all together that really began to interest me as an analyst. And my fellow faculty member at West Point, Frank Fabozzi, who's the author of innumerable fixed income books.
Oh yeah, that name is very familiar.
Yeah, well, Frank is publishing a book this month, will come and become available, about the importance of resiliency in companies. So we've been collaborating about the practical effects of this economic and technological competition.
I've got one of Frank's books on my bookshelf here about fixed income. So from my CFA days, this is really fascinating, JOC. And you mentioned quantum. We have some investments here in quantum, and we also obviously are looking at AI. Do you believe that this is an area where we can kind of make up some of that ground? You say that we're kind of tied right now with the Chinese. Can we, get a little bit ahead in terms of technologies, do you think?
Yeah, I think the next couple of years, as the pace of technology in deployment Morgan Stanley just published a very deep dive on what they call physical AI. And it's the movement of AI into the factory. And where the ability of we in the United States and the Western system, not only to develop, but also to incorporate AI, is really where it's going to be most important. You've seen the videos of the dancing robots and the kung fu robots in China. That's, that's kind of eye candy. But think about, they have, I've been to factories in the PRC, which are the size of a couple of football fields, which have maybe 4 employees in them.
Mm.
So it's really a function of two things: automation on the one hand, but then intelligence on the other hand.
Mm.
And then those, think of a rack of hundreds of CNC machines machining out different components, all of which are networked and all of which are talking to one another to synchronize line speed. So as we go from where we are today in compute to quantum compute and end up with orders of magnitude increases in capacity and speed, all that stuff really pressures the imagination to think about what that can mean. I mean, I often refer to myself as an 8-bit guy in a 132-bit world. And really that's the challenge. And it's the ability to take the capacity and the capability and then do something productive with it. That is going to lead to it. It's what one of our foundational, we're bullish on America. And we're bullish on America because of this recognition of the need to reshore and reinvest in the industrial and manufacturing economy and integrate the development of technology with the deployment of technology and the change in mix where we were, if GDP is C plus I plus G, we've probably been too much C and too much G and not enough I. And as we begin to invest and save and deploy, the United States is going to be one of the premier places in the world to be. Now, that transition is not going to be without volatility and excitement, but
Sure.
we are foundationally optimistic about the U.S.
That's great.
Talley, I think you had a
Can I ask a
question.
question?
Yeah.
I'm going to jump in here, John. So we've got this investment theme of U.S. manufacturing renaissance, and as you touched on earlier, at the center of it is the One Big Beautiful Bill Act, the OBBBA, and the 100% capex expensing, which I think is a significant tailwind. And I mean, look, we've got core capital goods orders booming 6-7% year over year. Industrials, material stocks are, two of the top 3 leading sectors. Do you think that this is starting to work? Are we kind of on the leading edge of a significant wave of manufacturing recovery and economic boom here?
I really do, and it will be assisted by a weaker dollar, which we saw and are seeing again this morning. It's interesting that the dollar regained a lot. Every time the bombs fall, the dollar gets bid. Um, and But I think structurally, a weaker dollar helps that theme because we became so uncompetitive as an exporter. And that's part of what the whole Mar-a-Lago Accords and all that line of thought that runs through the administration, that is to restore United States capability and competitive position as a manufacturing powerhouse. So you're going to see continuous policy changes to support that because we became a consumption and a service economy, right? You know, we consumed on our screens, and we consumed a hell of a lot of healthcare and information services. But the mix is going to change towards making more stuff. And that's where the tariff protection comes in. That's where the incentives to investment come in. And I think that's going to be a base building, which is going to go on for a number of years. Hey, Sarah, if you were to go to slide 5, I can expand on that a bit. So this is one of the things I think is really important is in a world as dynamic as today's is, you got to have a framework about, what the connections are and what the transmission mechanisms are, because the flow of headlines can be intimidating, at least to me, where something happens and I'm like, I have no idea what that means to me, but it really comes down to, okay, what's going to, take Iran, for example. What is that going to mean? How did that ripple into the economic equation? And to me, it's number one, it's unambiguously inflationary. And then what, right? But this is our one-page view of how the world works. This is the world according to Whitney. And the major takeaways are, one, we are well along in the abandonment of globalization, and the whole notion of competitive advantage and Ricardian economics is being abandoned, that we're no longer seeking economic efficiency across a global system, because the problem with that is it creates winner take all outcomes, and it was weaponized by multiple parties. Rather, the determinative factor in today's world is power. And you either have the ability to project power or you don't. And there's only 4 power blocks in the world today. So China, for one, was the early mover in pure power projection through their island building activities across the South China Sea, where they simply appropriated property and space that had been globally recognized. And it started with the Philippines, and other sovereign property was appropriated, and they built islands, and it went to the World Court, and the World Court said stop, and they said, we really don't care what you say. We're going to continue to claim other people's sovereign space until they do something about it. And as yet, nobody has done anything. So they began to act by power projection in the Philippines, in South Korea, in Vietnam, Malaysia, and that goes back several years now. Then you see the Russia incursion into Ukraine. You see the United States acting in Venezuela and now Iran. And it has caused great anxiety and frustration among our friends and foes alike. Our European allies simply don't know what to do. And so they're struggling. So in this diagram, you see Western liberalism in the center of the equation, but pardon my arts and crafts, but I tried to show the fracture marks, because clearly, as was shown yesterday, as President Trump said, simply, we're no longer trading with Spain, period. Forget about it. There's cracks in the system. But the other 3 blocks are Russia, and people continuously kind of misunderstand Russia and diminish it as simply a gas station with a civilization. It's a lot more than that. It also is a gas station with a civilization and 2,200 nuclear warheads. So they have the biggest nuclear capacity in the world today. You have China, obviously, Chinese communism. And we frequently forget that China is deeply grounded in a Marxist, Leninist, Maoist, Stalinist state, period, full stop, end of report. And that the individual is subordinated to the collective. And they act through that mechanism to project state power and state power only, and that the lifting up of people's lives and well-being is purely in furtherance of continuing power. And then you have what is the best I could describe as Indo-MENA economic and political emergence. This is underappreciated, that you can't ignore India, but you can be massively frustrated trying to invest in it as one who has tried for 20 years. But the linkages between India, Central Asia, across the Gulf into the Gulf states, the GCC states, and the MENA states, that's one of the sleeper phenomena that will emerge over the next couple of years. So where you look at the world, whenever something like Iran happens, this simple diagram kind of helps us interpret what the likely consequences are going to be. So questions?
Yes. Sarah, I think we're good with John. Are you good with the slides, or are there any more that you want to share, or should I tell her?
No, that's fine.
Okay, so we can get rid of the slides. But here's a question I think all us financial advisors and others want to know about, or is your view on what are the consequences now of what's going on with Iran? What are the different scenarios? What do you see unfolding?
Let me break it into two parallel evolutions, Jimmy. One is, interestingly, both in Iran and Venezuela can be interpreted as projection of a great power strategy by the United States to put China's energy supply at risk. That between Venezuela and Iran, and now with the Gulf states joining our effort, particularly the United Arab Emirates and Saudi, China has to worry about its energy supply for the first time in a long time. And particularly given President Trump's forthcoming trip to Beijing, he now goes to that meeting with a different set of frameworks. The economic element of it is twofold. One is, obviously, we've seen oil prices go up. And day before yesterday, gasoline prices nationally in the US went up 11 cents a gallon in one day. So obviously industry leapfrogs. So it's inherently inflationary. Then that comes to, you're seeing the bond market trying to integrate and digest, what does this mean? Because rates are about three things, right? The three Fs, which is the Fed, the flows, and fiscal balance. And so basically you saw implied forward yield curves drop a rate cut later in the year. Basically says, okay, the Fed now has less freedom of action. But, will we see dollar flows in? Don't know. But our fiscal balance continues to deteriorate. So all things being equal, you have to think, change your inflation expectation, change your set of expectations about the level and shape of the yield curve. So that's implication number one. Everybody then starts plugging a different yield curve level and shape into their earnings and dividend discount models, if people use everything so old-fashioned anymore. And saying, wow, if I believe there's more inflation, and I therefore believe that interest rates are going to have a different level and shape, what's the impact on my equity valuation model? Until I get to the technology sector, and valuation models don't matter. It's all about sentiment. If I think software is going to be driven to extinction by AI, I'm not really worried about what my dividend discount model tells me. So that says, okay, I've got sentiment, I've got valuation. and I've got flows going on all at the same time. And what I would typically do is take 2 aspirin and call Jim Worden. Um, so I think you can say more vol, different kind, but this will accelerate the economic transition of the United States. I mean, we are going to get $1.5 trillion defense bill. And we are going to get changes that the Defense Department is going to be a leading element of industrial policy in the United States. Look at their disagreement with Anthropic about the terms of the software license, right? So, I think you have an unambiguously strong foundational element, but there has to be more volatility. Stay optimistic, but tighten up your flak jacket.
Gotcha.
So let me ask a follow-up to that. Yeah. I hope you guys can hear me okay. So in pretty short order, the U.S. has succeeded in taking out dozens of Iranian leaders, including the Ayatollah. And so I'm kind of wondering how much longer do you think this conflict can persist when the snake is headless, so to speak? Does it end sooner rather than later?
What one man's view, and I'm not wearing camo. I think we got lucky that there was a cluster of Iranian leadership that was eliminated. On the one hand, on the other hand, it really comes down to what are we going to see? Are we going to see succession in terms of same concepts but new faces, or are we going to see revolution in terms of new concepts and new faces? In order for revolution to occur, a couple of things have to happen, Talley. One is you have to figure out who's in charge. And right now it seems that the Revolutionary Guard is in charge. And for there to be revolution, the standing army and the organized police forces have to join the populist revolution. And we don't see that happening yet. So you end up right now with more succession than transformation. If that's the case, then you'll see that would incentivize us to keep bombing, and that would continue because an Iran led by the Revolutionary Guard and a theocratic fundamentalist ideological government is, I believe the technical term is same shit, different day. And that's what to watch for. Essentially what we're seeing happening is actually the Abraham Accords being put into place in a military context. Who would have thought you could see Saudi Arabia and Israeli jets both attacking the same target? It's kind of unthinkable, but it's not done yet, not by a long shot. And that's before you get to second and third order consequences. Because we really don't know what's happening with Yemen. We really don't know. The Qataris continue to play both sides. So I do believe it's not going to end that quickly in terms of days. The longer it goes, the better off the Iranian interests are. And so it's basically watch what happens with a Revolutionary Guard leadership.
This is great hearing all of this, John. So I just have a follow-up question, regarding Iran and what's going on there. So putting on my optimism cap on for a moment, assuming that there is regime change, assuming that things settle down, we go through this period of stability, both in Iran and in Venezuela, we get regime change there. I just remember going way back during the period with Reagan, people would refer to this as the peace dividend, a period of very, very great stability. Do you see that, there could be an opening there? And does that peace dividend allow for oil prices to maybe come down considerably, and maybe the markets and the economy does well? What do you think? Or is that kind of a long shot until we get that stability?
Well, I think my opinion on the peace dividend was it was one of the gravest errors in the history of American foreign policy, that we missed a chance to remodel the world and walked away from it. And what we didn't understand is, in fact, what we needed to do was maintain the defense capability as a means of projecting power. And so I think there's not going to be this concept of peace dividend, that the world will, new equilibria and the concepts that we just went through, power projection capability is required to have a seat at the table. So in order to be relevant, European countries, and this is what sort of works against the EU experiment, European countries are going to have to, it's in their interest, not just because President Trump is yelling at them, to dramatically increase their military spending. They have to have the ability to defend themselves and project power or lose relevance. In terms of oil prices, I think that's offset by the recognition that carbon-based energy sources are a factor of life for at least another 2 decades. We cannot possibly deal with the increasing energy demand without it. China continues to increase its coal-based generation. So decarbonization briefs well, but it's a terrible public policy. And this is what European nations and all nations are facing. There's 3 big decisions they have to make. What about decarbonization? What about economic growth? And what about national sovereignty and defense? And you can have any 2, but not all 3. And so the way Japan has racked that has said, forget about decarbonization. We need to really ramp up defense spending. We need, Japan is the global powerhouse in LNG. They own the infrastructure of the logistics network, and they're restarting nukes. So they've made their decision. Germany, by contrast, continues to elevate decarbonization as the number 1 priority. That's what individuals, so I don't see an energy price benefit in the future. I see energy price adoption. So in order to have the digital economy we want, we're going to have to massively deploy nuclear, both large and small. Those are not cheap electrons. But we're also going to have to, and for the next 2 decades, deploy natural gas and coal. Similarly, transportation fuels, look at the fiasco measured by the write-offs of GM, Ford, and Stellantis on EVs. What's that all add up to? Probably pushing $50 billion of abandonment cost. I mean, it was, as I said, it was a noble vision, but nobody wanted it. The infrastructure to support it didn't occur. So whether it's in power generation or transportation fuels, it isn't going to get cheaper. It may get cleaner, and it may get more of it, and that means, and then that brings you back to Russia, and it brings you back to the Middle East. What is the budgetary equilibrium cost of oil? And I can assure you that those are discussions that are had as we try to say, how do you not impose pain on the American consumer with higher gas prices and energy prices on the one hand, and then how do you how do you recognize the fact that our once and future allies in the Gulf states have a budgetary cost of energy that keeps them stable, while realizing that that's a partial bailout to Russia at the same time. So that's why I go back to the four bubbles. But I don't expect a peace dividend. I expect
Interesting.
a growth in industrial activity, but it will in order to be relevant and have a seat at the table, you're going to need to be able to project power.
Interesting. So it
JOC,
feels like it's talk softly but carry a big stick.
Oh, how about a couple of big sticks?
A couple big sticks. I love it.
JOC, can you elaborate on AI and the global competition that we're in and how that affects geopolitics? I think it's a fascinating view that you have on this.
Well, I'll tell you. Let's tell a story. As I mentioned, we have an active late stage venture portfolio. One of our portfolio companies, software services companies, and it's both products and services. So they have about 150 PhD data sciences and data engineers who work predominantly for the intelligence community. And their specialty is moving applications from the low side, from unclassified environments to classified environments. So Salesforce doesn't run naturally in a secure environment. It sort of halts and catch fire. So they have to refactor models. They have to refactor software like that. At a board meeting on Friday, the chief technologist said, I need to share this with the board. We are now adopting agentic AI, which writes software to do upgrades to our own software and patches. And I was able to do in 3 hours what our normal process would have taken 3 months to do a simple update. And that just hit me in the face like, uh-oh, am I predator or am I prey? Am I going to get eaten or does this give me an opportunity? That is the scale of what we're talking about. So another one of our companies is using software to do quality control, automated visual inspection in pharmaceuticals. So pharmaceuticals, because of the criticality of the product, in pre-filled containers, like pre-filled syringes, medicine bottles that the syringe goes in or other things, the FDA requires 100% inspection. You can't do sampling. And so they have semi-automated lines where the product comes down, cameras focus on it, they try to screen out obviously defective stuff, but then humans have to look at all the vials. A human can do that for about 20 minutes before they just drone out. We actually brought it to the point where the FDA has approved our ability to replace the human, that we had to run against human tests. And we can run 10 times faster with fewer mistakes and take out about 3/4 of the people. So these are the kind of transformative changes. AI is not new. What is new is the combination of the ability to harness data and process at scale on a cost-effective basis. And it's both supervised and unsupervised. In the warfare world, it's changing, and this is why there's the Anthropic versus the Department of War. Mark Benioff and Eric Schmidt spoke at the Honolulu Defense Forum. And Schmidt said very confidently, we're going to have a blended system where there will be a human in the loop up and until the decision has been made to release fires and go attack something, at which it will be a no human process. And I was sitting there listening and kind of like, oh, okay, sounds a lot like Skynet, but and that is the objection that Anthropic is saying, no, we're not going to enable that. Well, it's too late. I mean, that's what Schmidt's whole effort is about. So I hope I'm addressing your question, Jimmy, but it's kind of hard, particularly for high mileage people like me, to continuously to refresh imagination. That's what it takes. It's kind of okay. We all suffer from the normalcy bias that today's like yesterday and tomorrow's going to be like today. You've got to try to work against that. And so the interaction between quantum means AI will work near instantaneously. So I don't know about you all, but I'm struggling to integrate Perplexity, Claude, the big five models into how we run our business, but not how we run our lives. So it's something that will determine competitive advantages. And this is where firms like yours, Jimmy, are of enormous value to your colleagues and your advisors, because it takes a platform. You can't, it's going to be really hard to be by yourself. On the one hand, it's enormously enabling, but on the other hand, you need partners and collaborators to be able to be continuously innovating and continuously imagining, if that's a word, kind of what the next spin of the wheel is going to look like.
Wow.
I don't know if that. So yeah. I mean, go back and read The Singularity. I mean, at what point does artificial general intelligence, i.e., the ability to mimic mature professional adult behavior, establish itself? It will happen. Are we ready?
Yeah, it's interesting. As you guys all know, I've got a hard stop in a few minutes. You guys can continue on. I could talk to John for another 5 hours. So, but that being said, I do want to say one thing before I jump off, and you guys can continue on. I don't know if I gave it justice on introducing our relationship with John, but we use that selective critical technologies index, and what that index does, and if you want to talk about it, John, you can. It screens out companies that have entanglement risk with other nations like China. You want to elaborate on how you guys came up with that index and how investors can use that?
Thank you. I'd love to. And but basically, the problem we were seeking to solve is there's a lot of people out there, very bright folks, whether it's Economist Intelligence Unit or any one of the number of consulting firms, will give you a qualitative view on what the relationship of the U.S. to China is, or England and France. But we kept coming down to the so what. And the so what is, we know we're going to deglobalize. We're watching it happening. We know we're going into multipolar world. Well, what companies are going to be the winners and the losers? And so I challenged ourselves to basically quantify that decision making through a factor model that identifies and quantifies and rank orders the degree of risk embedded in any given company. So that's what our ratings do. And so what we do, and that's our general capability is to take a problem, digitally transform it, and quantify it into a scalable way to measure concrete risk. So at the end of the day, we rate 18,000 companies for what we consider their degree of entanglement with adversaries and hence their geostrategic risk. So if your intellectual property is tied up with an adversary, if their end market is a major part of your revenue line, if you source or manufacture an adversary, you benefited from during the period of globalization. Unfortunately, the wind has changed 180 degrees, and what used to be going downhill or downwind is now going uphill and upwind. And we quantify that, and that's how we use that capability to construct different portfolios. So thanks for the tip. So we then kind of adjust that at different problem sets. So I could go on way too long about quantification and digital mimicry. But that's how we're doing. We think the introduction and the broad availability of AI tools as it works into the investment management business, it's going to make the business a lot more fun, and a lot more rewarding, and most importantly, a lot more important to our clients.
That's great.
But
I'm going to let you guys continue on.
We're selling picks and shovels to you smart guys.
I'm going to let you guys continue on to talk about what's going on with geopolitics, but JOC, we'll see you soon. Thank you. See you guys. Keep going.
Thanks,
Bye-bye,
Jimmy.
Jimmy. I mean, Jim and Talley, I've got a couple of minutes, but I've got to stop relatively soon too. How's your schedule look?
So I just have one more question for you, JOC, if that's okay.
Absolutely.
I noticed, you're the critical technologies index owns Palantir. That's also something that we own for clients. And I know they have a different way of looking at AI than, a lot of these other ones like OpenAI and Anthropic. Theirs is kind of at a very secure custom level with ontology, and they're also used by the intelligence agencies out there. Is that something that you can speak to? Do you think that this is kind of the future of AI, that it's very, very secure, very, very private, very customized to organizations and how it's used?
Well, I think you're going to have a dual world, much like you have in telecommunications. So Palantir, I would say, is not an AI company. I would say they're an exquisite user of AI capability. So it's where you sit in the value chain. So they're in there trying to answer questions and solve problems, which as an early entrant, they developed their own tools and techniques to do so. So there's going to be, you're seeing it happen in healthcare also.
Mm-hmm.
There's one or two models and tools which are very specific to healthcare, to diagnostics. One of my good friends, Tom Frieden, who led the CDC and was health commissioner here in New York, has just written a book called The Plan or something. But he's a big user of, an advocate of AI in healthcare as a diagnostic tool. That is a very purpose-built, vertically integrated capability. But then you have the general models, the Chat GPT-9,
sure,
the Perplexities, et cetera. We're going both ways. Where it gets really difficult is you see company, how does DeepSeek fit? So DeepSeek is sort of the Huawei, as Huawei is to wireless,
mm-hmm.
DeepSeek is to AI. So any rational person has to understand anything I do on DeepSeek is made available to every other Chinese enterprise. So if I run on DeepSeek, I'm sharing all my data with the collective, the Borg, the anthill of Chinese industry. So if I have a Chinese competitor, they get my data. There's a lot of them who, a lot of companies say, I don't care. But because DeepSeek is going to be 20, 30, 40% cheaper for me as a user than the equivalent OpenAI or Anthropic product. And so you'll have general purpose models, specific purpose models, and then truly secure lockdown models. But that's going to be the competitive framework. My AI can beat up your AI. But I think Palantir, has, and I'm a sold out bull on Palantir, as I am on many things. God damn it. So that's where the imagination failed again. It's like, okay, great. You got the first 20% of the move, genius. But so companies like that who develop their niche, develop their moat, develop they're an excellent advantage, and you'll see more of them.
Interesting.
So Tally, how do you think about? I mean, what are the questions that you're scratching your head? Since we share the same barber.
Yeah. Well, so I've put a good deal of thought into this productivity equation, and I think what we have in economics is a measurement problem, and a lot of economists are really questioning whether or not AI is having an impact on productivity. I just think that they're looking at it wrong. And so one very, what they say, necessity is the mother of invention. We had this government shutdown and it paid dividends. You guys are talking about a peace dividend. Well, I very simply created, and I'll boil it down into plain English, S&P 500 revenues per employee. And that is the basic equation for productivity in the private sector. And lo and behold, when you look at that, it's growing 6% year over year compared to sub 2 for the BLS measure, which is wildly erratic. It behaves almost like an error term. And so I think it's causing the economics community, to kind of go into a tailspin, and it's staring us right in the face. And it's a massive tailwind for margins. I've written about this a few times, and it's one of my kind of key microeconomic themes and why we're so bullish on the stock market here at home. But what do you think about that, John?
Well, I love that measure because I don't think we're getting. I don't attribute that revenues per employee to work from home either. We are getting more productive because we have more leverageable tools, and it's the combination of that and this physical AI element of I can run more factory floor with fewer employees. That is the deflationary offset to the inflationary input prices. So we have the, all right, I've got input prices of everything going up, but I've got this productivity offset.
100%.
And I agree with you. It's a measurement problem and it's an imagination problem.
Yeah, I mean, that's another element.
I try to read. Right. Say again. I'm sorry. I spoke over you.
Unit labor costs have been well under control. So I agree with you as productivity increases, and that's been a hallmark of this cycle. I think it puts a lid on compensation costs, and once again, you have a margin tailwind.
Right, but then you get into the skew problem that I talked about, globalization and technology skew wealth and income into very narrow, concentrated distributions, which is inherently unstable.
Yep.
Somebody's productivity gain is some rentier's benefit. So we don't have the economic positive externality. If Elon Musk is worth $1 trillion, that doesn't help the other 300 and something million people in the United States. So we have the externalities are really what matters. And I think our elected class is really struggling with how to do that.
Well, I actually think that these Trump accounts for unborn Americans are kind of an interesting partial solution to that.
One
massive
over
problem.
1 plus R to the N is, more powerful than E equals MC squared.
Yeah.
Yeah.
I agree with you. And so this is all part of this notion. If the United States returns to investment in the C plus I plus G, look out. I mean, spending 30 years buying cheap shit from abroad to have our 43rd pair of blue jeans does not create a powerhouse, but creating investment capital does.
Yeah, absolutely. What was it? Was it Einstein who said that the power of compounded interest is one of the great wonders of the world? Yeah.
So, yeah. And, well, look, can we do this again sometime?
It just got interesting. Yeah.
Yeah. So I'm sorry, John, one final question.
No,
we're
absolutely.
talking AI, we're talking about productivity, and, Talley mentioned the BLS number, way different than, the S&P revenue per employee. I'm just thinking that a lot of government workers and a lot of areas where it's not very productive, how long do you think it takes before AI really can infiltrate some of these areas that are just not very efficient at all? I know, there was a very short period where we had this Doge, but I feel like that almost needs to be everywhere, right?
Right.
Private companies are already doing this, but like, how long does it take for the public sector to adopt?
Well, I don't want to stray into politics, but I will simply observe. I had a near death brush with Doge about eliminating one of my customers in
Oh
the
no.
government, and I was like, "Wait a minute! I support the concept. I don't support the application."
Yeah.
But I think, look, when you see the illumination of just widespread fraud in the system,
Yeah.
like how did you think there were 500 businesses in that one building that you were sending money to?
Yeah.
The again, this comes back to my 3 F's of Fed flows and fiscal balance. This productivity, the U.S. government is going to have to cut spending.
Yeah.
You can go back all the way to the Simpson-Bowles bill. If you go back, which I'm probably everybody's too young to remember that, the path to fiscal stability in the United States is well known. It's just nobody wants to do it because it's too short-term painful.
Yeah.
But at such time as it's required to be done, it will be done. And this productivity is part of the anesthesia or the painkiller that's going to make those things doable, because it's going to give justification that says, look, why did we have to have a separate piece of legislation that said you can't send checks to dead people? What? I would have thought the system auto-corrected on that, but it didn't. It didn't. And again, I mean, Talley, that should be known. Would you like it to be known as the Leger stat or the Talley stat?
Yeah, that's right.
You get, it's kind of like finding a new particle or a new life form. You get to name it.
That's right. But, we complain about the deficits, but I have to point out that it has narrowed significantly from almost minus 30% of GDP back in the pandemic to closer to -6. And I don't think the administration, I think that's the issue. Politicians get blamed when things go wrong, and they get too much credit when things go right. But it's the automatic stabilizers. It's pretty much as simple as that, right?
Right.
Rising incomes and profits.
Mm-hmm.
And the whole, the grand experiment on tariffs, right? The economics, look, and that supported the Mar-a-Lago Accordists, if you will, that, hey, there was a lot of free riding going on, which the United States could eliminate, could accrue to our balance without dramatic impact. Now, the Supreme Court decision, there's a wild card. But look, I'll tell you one thing we started to talk about, which is, what do I worry about? What I worry about is, built into the timeline right now is November 10th, November 17th, the waivers by China of restrictions on rare earth elements and critical materials expire. And they're already squeezing Japan on these things. If in fact, as part of the geopolitical negotiation that President Trump is going into, the Chinese know that if they squeeze on something like tungsten, for example, tungsten prices have tripled in a year. It's not one of the things that generally lives on kind of Bloomberg screens for most people.
This is tungsten carbide right here.
Yeah. So it's worth more today than it was a year ago. So, but that, it's not baseline industrial demand for tungsten. It's anticipatory buying, because tungsten isn't everything. And if the availability of tungsten is put at risk, then factories start shutting down. And that's out there. And so the president has to fly to Beijing and says, look, I need assurance you're not going to drop that bomb, because even if they pre-announce, they could either throw us into a recession, which would be bad for Trump's real midterm prospects, or help us avoid a recession. So they have a lot of input. The adversary always gets a vote on the same, and they would like President Trump to say the United States does not support Taiwanese independence. That's what they want. And they're saying, look, we're not going to cause you a recession, and we're not going to cause you to lose the House of Representatives and the Senate by putting you in a recession. You just have to say this one thing. And I have no idea how that shakes out.
To be continued, I guess, right?
Yeah, because travels in the mindset of President Trump are. You ever see the movie Hitchhiker's Guide to the Galaxy?
Yeah.
That's my guide to understanding Trump policy.
John, well, this has been fantastic. Thank you so much for your time, and
thank you.
Always interested to hear what your thoughts are on different things, especially as it relates to geopolitics. So thank you.
Well, I value our partnership. It's a privilege to get together. And Talley, make the terrifying journey across the Hudson River. Come see us.
I would love that. Okay, John, will do.
All right. Talk soon.
Thank you so much.
Come and dance on our floor.